Hey there, welcome to the Q4, Q1 portfolio update. Look where we are. I'm not in my house. Oh my gosh. The last 12 months I've been doing these videos from my kitchen or my living room or even my backyard. Now, thanks to the vaccination in my arm, we're back in the office. This portfolio update is titled A Return to Diversification in a Reflationary Recovery. I know, boring, but important. Let's talk about what we did in Q4 and the changes we made again at the beginning of this quarter. We've had a few changes over the last 6 months, including both those quarters. We have a new president. We did our first quarterly rebalance on November 4th, right after the presidential election. A change of party, a change of ideology. We've had a new stimulus package since then. We've had a vaccine rollout since then. Many of you have already been vaccinated with 1 dose or 2. What a change from even 6 months ago. 12 months ago, we would never even have thought that this day was coming. It was so far in the future, and now it's here. We've also had a change in the economic environment. And those changes caused us to rebalance the portfolio. In Q4, we broadened out the diversification across all of our models. We increased the equity exposure. We increased the global equity exposure by adding emerging markets and developed markets. We also broadened out the diversification by adding some mid-cap stocks and some small-cap stocks to the equity portfolio. We did that across all of the models. We let that sit and cook over Q1, and at the beginning of Q2 on April 6th, we did it again. In 2020, a small number of equities and companies moved the market surprisingly up in a strong fashion. Right now, we're seeing a broadening out of diversification. So we increased value in our portfolio. We increased the global exposure again across all our models. We added a quantitative multi-asset manager within the models that we manage for you, which will give us more diversification. We lessened the duration within our fixed income portfolio because over the next 6 to 12 months, I expect interest rates to slowly rise and inflation to become a little bit more of an issue. I don't expect the Federal Reserve to change interest rates till probably 12 months from now, but we're trying to get ahead of that curve. Last summer, we entered into a new phase of the business cycle. Now, in April, we've even further advanced. On the screen, you'll see a slide of the business cycle framework of where the United States is and other countries around the world in relation to the business cycle. We have moved past the beginning and early stages of the business cycle, now are approaching the mid phase of the business cycle. We know that because interest rates have started to rise, inflation is starting to become a little bit more of an issue, and as the world reopens, economic activity is going to strengthen and going to broaden out. It's a fun chart. As we get to the top of the peak, the last expansionary time frame was over 10 years. We've been in this new phase of the business cycle for about 9 to 10 months now. We'll have to see how that goes. The next chart you see on your screen is the chart of historical asset patterns. This shows the different stages of the business cycle, which we were just referring to, and how different asset classes perform at these different stages. You can see that we're in the second stage, the reflation stage. Hence, the reason this video is called A Return to Diversification in a Reflationary Recovery. Yes, boring, but applicable. Here, as we see, we're in a period of inflation moving into reflation, where small caps, value, and international become more prevalent and tend to do better historically. And interest rates tend to rise, which puts pressure on bonds. Hence the changes that we made in the portfolio in Q4 and Q1 to coordinate where we are in the business cycle currently. Inflation. I've had a lot of questions about inflation here recently. The chart in front of you shows inflation from 1872 till 2020. The average inflation rate over that long time frame is about 2.62%. I think in 2021, our inflation rate is going to be about 2.5%. The 10-year moving average has been less than that, about 1.7. But inflation is certainly here and will continue to be an issue as we move through the next 6 to 12 months. If you try to buy a car or you're out there shopping for a home, you know inflation is real. It's not going anywhere anytime soon, so we have to plan for it. Another major factor that has changed in the last 6 months is interest rates and economic stimulus. On the chart in front of you, it shows the U.S. Treasury yield curve, and we've seen the 10-year Treasury rise from about 0.6% all the way up to 1.77 and has now settled back down to about 1.6% or so. That's a phenomenon that probably is going to continue over the next 6 to 12 months. On the other side of the chart, you'll see the central bank's balance sheet, which basically means how much stimulus, how much money has been put in to the global economic system. That's a big rise. There's a lot of liquidity out there, hence the rising of asset prices. The most important thing we're going to see over the next 6 months is how the vaccine rollout continues, how the global reopening pans out, and how the economies start to really recover, and earnings. Earnings, earnings, earnings. Earnings are now going to be important again. We're not looking out 2-3 quarters. Next quarter's earnings are very important as we come into the summer and into the fall. On a positive note, economic activity is continuing to accelerate. As we go into the next quarter, we are going to see more economic activity. Economic growth will continue to increase, and with that come its pals, rising rates and inflation. But as always, we use common sense investment management, and we're on top of it. On a personal note, it's great to be back in the office. About 4 weeks ago, we came back, and the office looks great. We were out for over 8 months due to remodeling and different things that happened in the building. We think it looks great and can't wait to see you in our newly remodeled office. Thanks for your trust and confidence. And remember, stay safe, stay healthy. God bless. Dunnigan Financial Group, planning for life.